Hey everybody, welcome. My name is Matthew. Thank you so much for joining. Today we're going to do an update on the M3 money supply for the United States. All right, so this is on the back of the last video that I just did was an update on M1 money supply for the United States. This is an update on M3. Okay, M3, total public-facing money for the United States. What you're looking at right here, though, is something that was part of M1 yesterday, M0. It's just cash that's outside the Federal Reserve, cash that's outside banks, straight up cash and coin that the public holds. It's about $2.2 trillion as of the end of last year, M0. All right. This is part of, again, the narrow money supply, which we talked about in the last video. Okay, the other part of that is demand deposits, which individuals, retail, and corporate institutions hold at banks, available on demand, sight deposits, demand deposits, checking accounts. That's also part of M1. I'm not showing M1 here, but basically this is M0, the most liquid form of money in today's fiat world. All right, now I'm going to show you M3. And I'm going to do that with a red line here that the Federal Reserve used to publish right now. Okay. I talked about this before. This is just a quick refresher, hopefully. See, this only goes to February 2006. $10.2 trillion, $10,276 billion worth of money, February 2006. Federal Reserve, in their infinite wisdom, the monetary regulator of the United States, one of the core things that Milton Friedman, Paul Volcker, all of these economists have always said that you need to get control of the money supply if you're going to be the monetary regulator, if you're going to be the central bank. This is the same advice that they give to the United States and the same advice that they would give to, for example, Chile or the Europeans or the Japanese or any other central bank around the world, Chinese included, communist though they are. All right, so the Federal Reserve, in their infinite wisdom, decided to stop publishing this. They made a statement, very PC, said that there's no economic value included in this anymore, but it's extremely curious because it's right before the global financial crisis. Okay, so quickly backing up, what is M3? M3 is the broadest money supply that the Federal Reserve used to publish. M0 is the most narrow, most liquid money supply that the public can hold in the modern fiat world, cash and coin. M3 is the broadest. It would help for economies to understand how bad inflation could be if the central bank is supposed to be doing a good job to at least see the M3 money supply. But nope, Federal Reserve said it's not worth it. Very interesting. It was a couple years before the financial crisis. So that leaves people like myself. John Williams from Shadow Stats used to do this, although he hasn't updated his website in a while. I'm not sure the status of what he does in general now, but I'm ready to go continue this work as well. So many other people have tried to estimate what M3 could be. The Federal Reserve still does publish some parts of the M3 money supply, and I'm going to go through that right now. Bottom line, M3 is the broadest measure of the United States money supply. It includes M2, which is basically less liquid retail deposits than M1, savings accounts, time deposit accounts, money market funds, and M3, which is less liquid institutional deposits than M2, large time deposit accounts, institutional money market accounts, and two things that are very interesting and hard to quantify sometimes, repurchase agreements and euro dollars. I try to go through this relatively quickly here. Let's go through and let's show you what I can do. Basically, right now, my M3, without a couple pieces of the puzzle, putting it on right now. All right. So with the Federal Reserve data that they do publish, we can get something that actually looks pretty close to what they do publish here, and then obviously grows and has a big spike here after COVID with a lot of the money printing that happened in M1 anyway. Of course, we see it at M3. What's the gap here? All right, you see that when they stopped publishing in 2006, theirs is still a little bit higher than mine. What's the gap? Okay, notice in the tooltip I say X repos, stable coins, euro dollars. Stable coins are something new. It wasn't around in 1997 or 2006, 2007. Let's look at repos, Eurodollars. Very briefly. A repurchase agreement, I've said this many times, is simply a treasury security that trades like cash. A treasury security that trades like cash. The United States has some $34 trillion in debt. Most of that is treasury securities. Could be a bond, could be a bill, could be a note, could be very short term, could be long term. When those things are packaged up and sold back and forth to banks, hedge funds, money market funds, even some high net worth individuals, for the purpose of leverage, that's called a repurchase agreement. All right, I'll come back to that. The other piece that I'm missing here is called Eurodollars. What's a Eurodollar? It used to be part of M3 as well. This is why there's a gap. All right, Eurodollars are simply offshore dollars. Eurodollars, you got to think Panama Papers, Paradise Papers, dollar-based accounts that are outside the control of the Federal Reserve, that are in banks, institutions, entities outside the US. That's pretty hard to quantify. And in fact, that is one of the reasons for sure why the Federal Reserve stopped publishing. Although they didn't say this in 2006, they lost control of this, which I'm going to show you. Taking a moment to remind you that this show is brought to you by Trezor, home of the original Bitcoin hardware wallet. For over 10 years now, Trezor means business in Bitcoin security and functionality. When using their wallet software Trezor Suite to connect to the Bitcoin network, you're automatically connected via Tor, protecting your identity and giving you full control of your coins in a fully open source manner, both on the software level and on the hardware level. So head on over to Trezor.io to grab your Trezor Safe 3 with a secure element, Model T with a touchscreen, or the original Trezor 1, as well as a ton of available accessories to back up your keys and keep your coins safe. This show is proud to be associated with Trezor. All right, so that was one of the reasons. Also see Jeffrey Snyder's Eurodollar University. Very good info on this stuff, but even he doesn't know how many Eurodollars are in the world. We'll come back to that. All right, but you can still do somewhat of a makeshift M3 here when you just take M2, which the Fed still does publish, and you add in large time deposits and you add in institutional money market funds, okay? Now, a money market fund, just very briefly there, it's already included in my graph, my visual here. Money market fund, you can kind of think of it actually like the third thing I have here. It's a stable coin. Money market fund is when you very simply just hold assets, typically government bonds as well, and you issue something against that people can hold like cash. It's called a money market fund. Typically, this is a broker-dealer based entity on the one side, money market funds on the other side. But basically, if you have a brokerage account and you sell some stock and you see that you have cash there in your brokerage account, it's money market, okay? It has different rules than checking accounts. It's not insured, so on and so forth. This is just how it works in the U.S. Not all entities work the same. Not all nations work the same. But in the United States, it's a big part of the money supply. It's included. It's included here, okay? So let's just look at what I have with M3X repos, stablecoins, and Eurodollars. 27 trillion, 27.8 trillion as of the end of last year, okay? Over 10 times higher than the actual cash that the Federal Reserve prints, 2.2 trillion. Okay, so keep that in mind. Now, there is another piece that the Federal Reserve has started to publish post-financial crisis. You have to work with a little bit. It's a confusing release, but they do some research and some publications on repurchase agreements. Okay, so I've gone through that. Again, this is nothing new. I've talked about this a year ago. I've already shown this, but as repurchase agreements, as I just said, are traditionally part of that M3 money supply, and the United States has a lot of repurchase agreements, I have added that on, and that is going to show up in lighter green here. All right. Now, we're getting somewhere. We see that we have an even bigger money supply by how much? 27.8 trillion here in the dark green, M3, X repos, stablecoins, and Eurodollars. We add in repos, so we're just X stablecoins and Eurodollars, 34.8 trillion, $7 trillion higher. That's how much U.S. Treasury bonds are repoed. It means basically levered up. It means basically they trade like cash between institutions, not actually trading the actual U.S. T-bill note, but it's a different instrument. that basically just trades like cash. That's all you need to know for this video. It's about $7 trillion worth. So going back to what I said before, the U.S. has $34 trillion in debt at the moment. Not all of that is U.S. government bonds, but the vast majority is. Only $7 trillion of that, $34 trillion of national debt, is repoed, or at least reported by the Federal Reserve. Okay, it's the liability side of these entities that repo. Remember, all of this stuff is always the liability side of somebody's of somebody's balance sheet, whether it's a bank, hedge fund, pension fund, institution, shadow bank, any sort of entity that's dealing with the financial world and has an account for someone else. That's a liability for them and an asset for whoever holds the account. That's how it works with money, okay? The broadest money supply. So now we start to see, again, the anatomy of the money supply a little bit, the broadest money supply. We can count repurchase agreements. By the way, the Federal Reserve holds a lot of repurchase agreements as well, which is unique. They never did that before, before the global financial crisis, let's say. And we have some banks that hold them, and we have shadow banks that have repurchase agreements as well, broker-dealers, insurance companies, hedge funds, pension funds, okay? We get to this number, the broad money supply of the United States. Retail, institutions, everybody, $34.7 trillion. But, as I said, that still doesn't include stable coins, still doesn't include euro dollars. So, in order to analyze that, we have to do some more work, and I'm not doing that in this video, but I will explain a couple things more. Firstly, let's look back here to 2006. Remember, the Federal Reserve's M3 number includes, supposedly, repurchase agreements and euro dollars. My number, the light green area, does not include euro dollars, does not include stable coins, which aren't included anyway, but they are M3 type money. But they do include repos, as I could back calculate these according to Federal Reserve publications that they started to release, which they never released before after the global financial crisis. You see that I'm already $2 trillion above them in 2006 when they stopped publishing. Why would that be? Well, because they weren't publishing all the repos, according to their own data. You had shadow banks, you had non-banks. Inside their red line here, it seems to only have been banks, actual depository institutions under U.S. banking law that repoed that they were counting. But there were many more institutions that were repoing. So not even talking about euro dollars, the other component. If you're just looking at repos, we can see already when the Federal Reserve stopped publishing in 2006, they were losing control of the M3 money supply. Not even talking about euro dollars, just repos. And when we got to the GFC, repos were $4.5 trillion higher than M3 money that didn't include repos. All right, so this was growing very fast, and it was part of the financialization, the packaging, the repackaging of debt securities all around America that caused the global financial crisis. But note, as I said yesterday, and you can't really see it on this chart, cash didn't grow much. Demand deposits, which you don't see here on this chart, part of M1, didn't grow much at all before the GFC. So it's not the sacred demand deposit that always causes the problem. In fact, there's really no evidence of that causing the problem in the United States before the GFC. Okay? That's one point there. Second point, euro dollars. That also is not, that is included in the Federal Reserve's tomato line here, the red line, but it's not included in my light green line or dark green line shaded area. It's not included in my data. And look, with my light green area, I'm already well above theirs. So how can that be? Well, the Federal Reserve definitely was losing control of the Eurodollar market as well, probably by the 80s. Remember, Eurodollars go back to World War II, when Europeans needed dollars for their projects because the dollar was just the best looking horse in the glue factory at the time, and still is, frankly. That's what a Eurodollar is. It has nothing to do with the euro. This is not the euro currency or anything like that. This is just dollars outside of the United States, outside the direct control of the Federal Reserve, offshore dollars, okay? There were tens of trillions of dollars in some of these Panama Papers, Paradise Papers. I'm not saying all of those were just dollar-based accounts, dollar-based deposits, but many of them were, for sure. It's to show you the Federal Reserve had lost control of Eurodollars as well, okay? So I'm not putting euro dollars on my M3 money supply yet because it's very difficult to calculate. In fact, there's probably no one in the world that knows the exact number. I have some ideas on some proxies. We can see where we can get, but it's going to take me some time. And I've been working on this for a while. So I'm just not counting euro dollars. And still, with the information that the Federal Reserve still publishes, I'm above their M3 number from 2006. All right. The last point is just stable coins. It's not a huge number now, but it absolutely is M3 type money. Looks and works just like a money market fund, which again is in my dark shaded area. It's pretty clear to calculate. It's basically institutions, money market funds. They hold U.S. Treasuries on the asset side, and then on the liability side, they have the NAV. It's like an ETF, the NAV. They have the value of their fund that investors can hold. That's what a money market fund is. That's the exact same thing as what a stablecoin is. Stablecoins will hold assets on their asset side. I'm not saying they're good assets, but typically treasuries to earn some interest. And on the liability side, they issue tokens. So tokens are their NAV. And the stablecoin market capitalization as of today is still under $150 billion or so. Tether is the largest at about $100 billion. But notice, that's peanuts compared to the actual M3 straight up fiat money supply. So I haven't added stablecoins yet. Once they get bigger, I might, just for this purpose, it's not really even, we're at less than 0.5% of this money supply, the stablecoin market cap. But all of those things put together, that whole blob of monetary instruments that's in some way liquid, in some way not liquid, because it's outside the direct control of any bank or depository institution. The rules are different. You count all them up, whether it's M1, M2, M3, retail deposits, time deposits, money market funds, repurchase agreements, and you'll get to this light green line, $34.8 trillion. That's approximately the M3 money supply without stable coins and euro dollars. More to come in the future. Definitely let me know, please, if you like this in the show notes, if you have any questions, and I hope it helped you. Thanks for watching.